We are live. Welcome, everybody. How is everyone doing on this wonderful Monday morning, afternoon, or evening, depending upon where you're at? Good morning, Patrick. Good morning, Tommy. Good morning, Jamie. Let's get rolling. First things first, we can see we have another large gap to the upside that still has not filled. So we can probably go ahead, if we can copy and move this drawing. So we can see that we have another gap above, right? Overnight inventory was 100% net short off of the open. We did get a little bit of a rally, which seemed to correct some of the overnight inventory that was unbalanced. And you can kind of see, where all of the volume happened overnight, right? So we know that, up here, there's not really very strong traders, or not really a lot of volume. It just kind of trickled down all night. And then a lot of the volume came in getting closer towards the open. We're still breaking this low here, and then basically B opened up and B kind of bounced around, just trapping enough buyers, and then eventually is now liquidating, and we are one time framing to the downside after a big low. If we take a peek over here, Bitcoin is getting the smack of its lifetime after everyone kind of thought it was going to hold. I think our target is this 20K still. That's kind of what we've been looking for the past couple of months. Last week we got a little paparuski, and everyone started to get bullish again, trapped enough people. But the key last week really was, we did not, if we go here, we never got back above that May 31st high. Tried it, couldn't get it, came back down, tried it again, couldn't get it, and then eventually has just given up. And as we're getting down to 23,000, you're thinking about some things here, right? Things that are going on in some other countries. Peter, good morning. Pop, good morning. You're thinking about countries like El Salvador, right? This could be detrimental to their economy because they put so much money in Bitcoin, up around like 40K, which was hilarious. I remember laughing about it at the time, thinking El Salvador, stupid. I even when I said that. And I'm not talking about like people, if you're El Salvadorian, I'm not talking about it like that. I'm just talking about the government. Just a bunch of dumb fucks. Which we already knew, right? The El Salvadorian government just fucking worthless as shit. So, let's bring over Thinkorswim, because I mean the market's basically just going down, right? So let's take a peek at our charts. Oh, so I changed this a little bit. We could talk about this real quick. So I've been studying, and you guys know, Tom, what's up, man? You guys know I've been studying options, just trying to get more in depth in options, right? And the best thing that I found about options is these gamma levels, and I've been trying to find zero gamma. Basically, zero gamma just means if let's just make one of these big, and we'll just use one of them. So let's say the SPY maximize the sell. Let's look at like a 30-minute chart. Okay, so we can see our closest level up here is this 385, which would be like 3850 on the ES, right? It's a negative gamma level. So basically what's happening is when the market gets below these negative gamma levels, it has to sell the market in order to make up for the puts it sold, right? So you can just imagine, as a dealer or a market maker, you sell puts and you buy calls, right? Because typically over time, if we look at a chart, right, let's look at the SPY, right? For the past 10 years, it has gone up. So, and market makers we know are playing long term, right? So they're buying calls and selling puts. Well, if this is a level, this 38.50 that they sold puts at, right, before, and then today we pretty much opened, well, way below it, right? They're going to have to start selling the futures contracts in order to hedge against these puts. So they sold these puts, and with this huge gap down, right? This is called like, well, I don't want to get too technical because I'm not an expert. But basically that's all you really need to know. I'm like dumbing this thing down like all the way to the simplest form that I can think of, because it is like just super duper complicated almost for no reason. But basically, so imagine this level here, this 38.50. Below this, every rally is going to get sold by market makers. Every rally. And dealers, market makers, think about them as the same. Okay, so every rally is going to get sold. Okay, if we get above this level, this will make the market a bit more rotational. Okay, and then as we get close to this their next level is not until 4,200. They haven't even bought any calls except for these are probably long-term calls up here. So really, there's not much. That would be 4,300, right? Yeah, yeah, those are pretty far away levels. So we're not really having to worry about that. But it's the same thing, right? Like I have Apple right here, and it's the same idea. So Apple gets down below this 135 level. Dealers are short this level, so they start selling Apple shares. And as we come back down to this 130, they also are short the 130s. So down there is where they will cover these shares, right? So they'll start buying them back here, buying them back. And then as it rallies back up, if it doesn't get back to 135, they'll sell rallies until it gets back above 135. So the key here basically is just a level to play off of, right? That's really all it is. It's almost kind of like automatic support and resistance, but it's not going to mark every support and resistance, right? So like if we were to make the SPY big, and we wanted to look, let's just look on a daily, you can see the range on this here, right? And if we look at Apple, let's look at you can still see the range from some of these puts and calls that are put in, right? So that's basically telling you in that 140 is that zero gamma level on Apple. And basically what zero gamma means is that the dealers don't have any exposure, so they can basically just kind of rotate. But once it starts to get close to this 150, they're long those 150 calls, so they start to buy futures to get it over that 150. So they start buying breaks every time to try to get it over that 150 to get these calls in the money, right? And that's like, I mean, if you want to do a little bit more digging into it, you should, because that explanation is very archaic and not as good as uh Brent Corbuccia is, I think, his name, or I'm probably saying it wrong. Let me look it up. C periods opening up. Let's take a peek at the volume real quick. Still about 16% more than yesterday. Here's that 3770 level. And remember, our target on the downside here is 3720. So it's a pretty far target, but that seems like a reasonable target. One thing I do want to bring up real quick also before I lose track of what I'm doing is I want to remind you guys of this. Okay, so remember we've seen this play before, we've done this play before, not as big of gaps or ever gaps like that, and this is just showing the emotion in the market, right? This is just basically, I mean, this gap today is probably a margin call. This was probably a margin call here. We gapped down, closed on the low. The next day, overnight, somebody got margin called. Next day went straight down. Overnight last night, somebody got margin called, and then we're at where we're at today. But remember this day here, 224. Oh, no, this was the Ukraine invasion day. Remember this day here, 124. That was the last Fed meeting where we had this huge move down and then a move, back in, and then we started to balance for a little while. So basically, what I'm saying is we just want to be careful here and not just blindly short at the lows, right? You want to remember that a huge short covering rally, even in a bear market as they call it, is still possible, and so we don't want to be getting short right at the lows. Another poor low getting put in here, which is kind of hilarious because we've just been putting in poor lows and poor highs like almost all the way down, which is just insane kind of. This is doing here. Okay, why is this yellow? Well, fuck, now I forget what I was looking up. Oh, that's what I was looking up. So if you guys want to learn more about like the gamma and stuff like that, and just something I'm trying to add to go in conjunction, right? Basically, what I'm trying to do with that information that I shared about the zero gamma is figure out if dealers are long or short, and if dealers are long or short, then there's opportunity to kind of play against that, right? Like if the dealers are um, it coming up to a negative gamma area, we know that we're probably safe to sell some rallies, right? And then if they're coming up to a positive gamma area, or if they're in the positive gamma area and they're coming up to a call wall, well, then we know that they're probably going to be buying the breaks, and we can use that to our advantage as well. But this is the guy right here. Oops. His name is Brent. He's the founder of what's called Spot Gamma. If we click on the thing, some really interesting information. It is, I mean, at least for me, complicated. Maybe it'll click faster for some other people, but for me, when I'm watching it, it is, uh, I'm taking notes and I'm still trying to get the grasp of it. And I've been doing it for a while now. I think I had a bit of a breakthrough this weekend, which is why I'm sharing it with you. And hopefully we'll just kind of see. Nothing is gonna there's no way to know for sure until we actually start to watch it over time, keep track of it. I want to pull this back over. This is one of the first times that I've seen the low ticker on the NYSE just sit like at 50. We can see how pinned the selling has been, right? There's only been one bar to even get above 100, but definitely didn't finish up there. And you can see these are all just pinning down here below the zero, and even most of these ones are just kind of along that negative 1000 level. And if you look up here, right, information technology somehow is saying that it's green. Must maybe just be a mistake. Yeah, I don't know why oops, I don't know why it's doing that. Consumer staples is green as well. It's probably basing it off of just today, I guess. That's okay. Yeah, so it's just basing it off of today's open. That's what it's doing. So it's above the open on today, but not necessarily up. So we've got single prints above or one time framing to the downside. So we can see basically what happened here this morning, in my opinion, and definitely could be wrong, is we had this little rally pop above, right? Retail traders are addicted to what? The price. So they saw that the open was here, price was going up, price got up above the open, they trapped a bunch of retail traders getting long, and then liquidated them, leaving us with some single prints, and then now we see C period leaving behind this poor low and single prints above. So we're still going to respect those single prints, especially on a big gap down day to like today. Right? There's no reason to try to fight the trend. I just don't I never understand it. People just you know I know it's super nice and feels really good to call the low or to pick the low, right? And we did a couple weeks ago when we were going up, right? We nailed the low a couple days in a row, which was spectacular. But it was just luck, right? And I'm gonna use an analogy from the new boot camp that I think can really kind of just drive this point home and start getting our mind thinking in probabilities. Okay. I was rereading a book this weekend called Thinking in Bets by Annie Duke, a really, really good book. And it reminded me that when you are thinking of trading psychology, or when you're thinking of trading, how similar it can be to how similar your trading psychology and your personal psychology can be, but also can be two separate categories, right? And we talked about personal psychology, and those are those emotions that you feel when you're trading. What do you feel, right? Is your heart starting to race? Is your blood pressure going up? Are your eyes dilating? Are you getting fidgety? Are you getting anxious? All of those, right? Now we're going to talk a little bit about the psychology of our competitors and also with the trades. Any thoughts on a BTC low? I think we're going to 20K, Tom. Um I mean, I don't know how long it's going to take to get there, but that's kind of where I've been looking for it. That's where I'd like to buy it, would be at 20K for the first try. Um that's what I'm waiting for to get down there to buy it. You might start to see you know, people start to sell out after they've had a big move over the weekend and today, really. Good morning, Adam. Okay, and so to the point of our trade psychology and our to make us think of our trades in more of a probabilities aspect, or more of a to take the emotion out of that part, right? So then we just have to understand the emotions that are in the trade once we're in it, instead of having to do both. Um, and this is what I want you to think of, okay? And I'd like to hear some answers in the chat if you guys can. Morning, Caesar. Okay, so let's think about a hypothetical scenario and think about the possible outcomes, right? Because that's what we're talking about in trading. We have all of the information except for what's going to happen next, right? And so the reason that this kind of sprung to my mind is Annie Duke talks about it in her book. And in trading is one of those places that is unlike it is similar to having to be a professional on a professional level, but it is one of those places where a amateur can beat a professional on any given day, right? So, let's say, I mean, me, for instance, I've been doing really well, especially lately, amateur. and I'm, you know, competing against pros. We're competing against professionals every single day. So this is one of those things. Amateurs, retail traders are able to beat some of the pros. This would never happen in basketball. This would never happen in chess, right? It's just it would not happen. It would never happen. Okay? It wouldn't happen in football or football in England, right? It just wouldn't happen. There's no way that if you were to play what's that game called that we used to play in soccer all the time? Um World Cup, right? Which is basically like a 3v3 with two goalies. If you just played 1v1, you would and get against Cristiano Ronaldo, you would win 0 times, right? You might not score any points. Okay? And so that's something you know for sure, right? But this is what I want to the market just keeps going down. Remember, the target here is still on the downside is 37.20, so we've still got a ways to go. So if you're still rocking your short, keep letting it just feel the weight of the market, right? Take a deep breath, trade, and just sink all the way down, right? But so I want you to think about the scenario, okay? And then answer me in the chat. Michael Jordan versus Kobe Bryant, 1v1, a game to 11 by ones, and 3-pointers are 2. Who will win? 1 for Michael Jordan, 2 for Kobe. Could happen in poker. Yeah, definitely could happen in poker. 1 Jordan, okay. I see 1 Jordan. Let's mark these down. So we got Jordan and Kobe. So far we got 1 for Jordan. Who else? Kobe. 1 for Kobe. 1 for Jordan. Another 1 for Jordan. Another 1 for Jordan. Another 1 for Kobe. Another 1 for Jordan. Another 1 for Jordan. 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 Another 1 for Jordan. Another 1 for Jordan. Another 1 for Jordan. Okay. So we can see here what's going on, right? We can see. Okay, everybody thinks Jordan will win. All right. And listen, I have this written down and it's in the boot camp, so eventually once I finish it and put it out, you'll see it, but I have it. Most people will pick Jordan. Some will pick Kobe, right? Why is that? Is it because Jordan was an elite defender? Is it just because of your age and you didn't really watch Kobe play and you just remember Jordan being the greatest of all time? Um, you know, let's change the scenario for a second, real quick. We're gonna go back to Kobe because Kobe's my man, but let's change the scenario for a second and let me put a different player up here. LeBron, right? Oops. Oh fuck, ruined it. So now 1 for Jordan, 2 for LeBron. 1v1. We're not talking about basketball as a sport. We're talking about a 1v1 game. So what do we think here? LeBron, Jordan. More of Jordan? Yeah. I've watched a lot of Jordan. Big fuck small. LeBron's big. LeBron's 6'10", 240 pounds. Michael Jordan, 6'6", Probably like 220. Probably like 219. Oh, Kobe and LeBron. No. Jordan, LeBron. So there's some more for LeBron this time. Still mostly Jordan here, right? Big sell order on the 3760, 129 lots on the bid. So a lot more even with Jordan and LeBron, right? Um, and I wonder what the reason is, right? Because they're a lot farther apart, right? Jordan and Kobe played against each other. Is the punchline going to be the helicopter pilot? No. So there's no real punchline. I'm just trying to get you to think outside the box here. Okay. So let's go back to Jordan and Kobe, right? Jordan and Kobe, everybody picked Jordan for the most part, right? Everyone had Jordan winning except for two contrarians picking Kobe, right? Now let's think about what the score is, right? They're playing to 11 by ones. What do we think the score is? Do we think the score is going to be, you know, let's say it's losers takeout. Do we think it's just going to go one for one over and over and over and over? Do we think that, um, you know, Jordan's just going to score every time and then he's going to shut Kobe down because Jordan was an elite defender? Um, he also happens to be a lot bigger than Kobe as far as lengthwise. Um, so do we think Jordan's going to blow Kobe out? Right. And then how long do you think it will take? Right. Let's say you've got to win by two. How long do you think it will take? Right. We have a commanding basically decision from our small, you know, anecdotal group in here that Jordan would definitely beat Kobe in a 1v1 match. Bitcoin's just getting smacked. Classic. Um, so now let's talk about the game. Okay, and this is the game that we play, right? Because like Annie Duke had said, is we can basically know everything except for what's going to happen next, right? We just can't see the flop. We can't see the turn. We can't see the river, right? And guess what? In trading, unlike poker, the river card is never ending, right? Damn, all cryptos are below 1 trillion. That's weird. Crypto market value falls below 1 trillion. CoinGecko. Crazy. Um, I mean, just what a funny day. Um, okay, so back to it. That's basically what we have here is a river card over and over and over and over. So now let's talk about the game. Okay. Michael scores the first point. So now we're going to draw the score. Jordan scores the first point. And the reason I like the Jordan versus Kobe and Jordan instead of Jordan versus LeBron is I think that LeBron might try too hard to beat Jordan and he might lose because he LeBron is now I'm getting off topic again. Um I'll just write it down and we'll come back to it. Okay, so back to Jordan and Kobe. Jordan scores the first point. right? Kobe scores a second point. Jordan scores a third point. Kobe scores the fourth point. On Jordan's next possession, he rolls his ankle. Now the game's 2-2. Okay? Now who do we think is going to win? Market cap lost a 1 trillion late last night. Damn. So now who do we think is going to win? Do we think it's going to be Jordan or do we think it's going to be Kobe, right? Now he has an injury designation. He rolled his ankle. Right? So now we start going for Kobe, right? Because Jordan rolled his ankle. Right. Remember, the game's 2-2, and we're playing to 11. I know that circle was really good. Okay, Kobe gets the ball, scores his next point. A rolled ankle for Jordan is nothing, right? How many times do you think he's rolled his ankle? Probably a million, right? He scores. It's 3-3. Kobe goes again. He scores. Jordan goes again. He scores. Uh-oh. Jordan rolls his other ankle. So now he's got 2 busted ankles. Now we're thinking Kobe's got this one for sure, right? Still Jordan. Okay, Kobe scores. Goes back to Jordan. Jordan doesn't score. Kobe scores again. So he's got 6. Jordan gets a 0 here. Nothing happens. Kobe gets the ball back. He scores. Jordan gets the ball back. He scores. Kobe gets the ball back. He scores. Still nothing. Now he has 8. Kobe doesn't score. Jordan scores. Kobe scores. Jordan doesn't score. Kobe gets the ball back, about to score his 10th point, tears his Achilles, loses the game. Damn. Right? Think about this when we're thinking about trading, right? And I drew it next to the market for a reason, right? Look at where all the competitors are competing. They're competing here. They're competing here, right? The volume starts to get light. Some people aren't able to compete. And so this is how you've got to think about your trading when it comes into these possible scenarios or these unpredictable scenarios, to get your brain out of thinking, why is the market doing that? The market shouldn't be doing that, but instead thinking in the probabilities. What are the probabilities that it's happening, right? Not very good, but it doesn't mean 0. And this is to help you get out of, if you're sometimes stuck in a trade that is a loser and you know it's a loser, but you're just failing to give it up, right? This is something this can help with if you think about it like that. One of the analogies, and probably better than mine, that Annie Duke talked about in her book was the call that Pete Carroll made, throwing the ball on 2nd down from the 1-yard line that cost them the Super Bowl against the Patriots. Right? The probabilities of that happening are very slim. There hadn't been one interception from the 1-yard line in any game that season, and it had been less than a 12% chance. I think the percentage might be a little bit off, but it is low, since 2015 that there's been a interception from the 1-yard line. Okay. And then, Pete Carroll, just got absolutely smashed. Like, why would you throw it? You have Marshawn Lynch. You should be running it, blah, 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 blah. But think about, you have to think about the defense as well, right? What is Bill Belichick's thinking? He's thinking, they've got Marshawn Lynch. They're going to run the ball, right? So what does he do? Stacks the box. Basically what I'm saying is it's an anomaly, right? And this is going to help you get out of that space in your head that tells you that it's not okay to lose a trade, right? This is where I'm trying to help you guys get to, is to understand that losing a trade in the grand scheme of things means nothing and is going to happen. It's just a matter of, are you going to let it significantly affect you and your account, or are you going to understand the probabilities of it happening are there, even if you only take A plus setups, right? The probabilities are there, right? Imagine if, what Annie Duke talks about in her book, imagine if Pete Carroll is right on the play, the pass goes for a touchdown, then he's remembered as a genius, right? But he was just kind of playing, he was trying to be sneaky, playing the odds. Big sell order 66.75, 101 lots. 1 minute left. Let's see if we're going to open up C period with some more single prints. But I mean, that's the thing I want you to understand, right? This is unlike, and this is all the way back to the beginning, this is unlike a profession. I mean, it's where it differs. You want to be on an elite level, but this is kind of where it differs, where even if you do your trade plan, you prepare for everything, you've studied the market, your trading psychology is good, blah blah blah, you could still lose, right? Whereas, let's say my dad played basketball against Jordan, right? Even Jordan now, right? Versus my dad when he was 20, still just a whooping, right? My dad might not even score any points, right? Yeah, basketball's a little bit different because Jordan's tall as fuck. My dad's over 6 foot, but still, my dad's got a really good shot. But it's just like, you know what I mean? Like, it's not gonna happen. Maybe my dad scores a point, maybe he doesn't. Who knows? But you think about the odds there. You've got to think about that when it comes to your odds, right? Why are we so quick to just be like, oh, Jordan definitely dominate that, but that doesn't happen in our trading. We're not because we're emotionally attached to our trading, right? Too emotionally attached in some cases. Information technologies below its open now. Oh, negative 0.8. Opened up on some singles here.
So if it opens up on singles, then it's just gonna be weak-handed, going down, right?
Not necessarily. So basically what we're looking for is when it opens up, if it gets an immediate push to close those singles. If it doesn't and it can't, then yeah, then you look to fade like a low risk trade, right? So right there it opened up, ticked up 2 ticks, and then it just kind of sat right here. You could toss a short on, try to get filled on the ask. You know, if you're able to, and just put a tight stop right there. You're risking a point basically, and targeting the low, and then maybe below the low if you were, if that's a trade you were looking for, yeah. And then if it starts to eat up into the singles, right? So it stops you out, you lose a point. It keeps going. Let's say it stalls out here, where we have that volume cluster. Add your short, put your stop up here. So now you're risking like 3 points. Still targeting the low or maybe the D low from up there. You're still in good risk to reward setup. And because you're trading with the trend, which is down, your probabilities, your odds are a little bit higher. I am just like really cautious today. If we do start to get any kind of like pump, I'll probably just close my short because I don't want to get caught in a short covering rally. And today has higher odds, I guess, of that. But I mean, the volume is still looking like it's down there. This level. Oh, we already passed 729 on this one. Breaking the low here. See if they can hold that 50, this 37.50. It looks like some bids are trying to step up down here. If they're able to hold that 37.50, they could, cause a little bit of a short covering rally. If they are unable to hold that 37.50, I don't see any bids down there. Yeah, the dollar is making an all-time high. Yeah, the yen is just getting an absolute smackarooski.
What did you say about the yen?
It's getting smacked. Yen futures are they're doing a little bit okay today. Look at it against the dollar. I mean, everything's just getting beat down right now. Look at this. Like Bitcoin, oil, all the futures, bonds. Damn, those Tesla puts. The dryer. Yeah. So let's just, be patient. Let's see how it acts right here at this 50. Uh, like I said, it does look like some bids are stepping up down here, but I want to see it test the 50 to see how strong they are. So it makes it really interesting to I guess kind of guesstimate what do we think the response will be from the Fed, right? Do they think that that there's enough selling or what? Look at this. Look at the breadth, 142 right here. Look at this selling, 39. Damn. This is, so let's look at this here. This is the advanced decline line. And I have it on the line on close, so we can change it to candlesticks. We can see this selling, I mean, pretty low here, is the lowest that we've seen since this is March 2020, COVID. It's the most selling that we've seen since COVID. Or most, not necessarily selling, most declining stocks, excuse me. Re-offer levels 59. 59 to 62 is like basically their hold levels. But look, they want it. They're trying to test that 50 here. Oh, so close. 50-50 right there. The fear and greed index for Bitcoin. Let me got it. Is it max fear? Oh yeah. It was worse last month though. Last month it was down at 9.
What's it at?
It's at 11. Yeah, I mean, it's not doing great. Tom says, so if people are saying that the dollar is debasing at 15% per year, that's why they buy Bitcoin. Over time, doesn't that make your Bitcoin worth less against the dollar? I mean, yeah, I mean, it's gonna fluctuate, and it really will depend what they peg it to. Yeah. Watch above the 62 here. If they're able to get above the 62, they could get a little bit of short covering up here. See that seller still hold. I think that's where that seller's sitting is on 62. Around that 62 level. And today is one of those days, right? Like where you remember why you have rules. That's why I kind of brought up the Jordan thing, because today seemed, and I mean, while I was getting short um this morning, and I posted in the chat, be careful because of inventory short, you might get a rally off of the morning, right? And we did, right? We got some upside. This is one of those days where you're when you're looking at the auction, you've got to be careful. Even if you were getting long, I'm not saying that you weren't that you can't make money on the long side on a day like today, right? Obviously, we know it can be done. It's just a lot more careful. But when we started to break that Globex low, that was the first sign during a period that more downside was possible, right? And so that's where the caution needed to come in. So even if you were getting long, your stop basically should have been the Globex low or the open. And this is one of those days where we can see we turned into a trend day with single prints to the downside so far, right? Definitely could flip around, but I mean, it's just one of those things where you just got to, be patient and let that trade come to you. And this, safer play is definitely has been the downside so far today. Um, how can I tell? How can you tell a short covering from a normal rally? So typically when you see short covering, what happens is the market starts to downtick and then all of a sudden pops back up and then starts to downtick again and goes past where it popped up from. That's normally how I base it off of. Um, there's no way to know 100% if it's short covering or new money buying. There's no way. I'm just guesstimating those levels that from my deduction of the auction. We popped above the 62, up to about 65 now. They're looking to fill that weak spot around like 69. What is this? Like 69.50 to 68 quarter. That's where they're trying to let the price come back up to. See how thin the profile gets up here. I won't be surprised if we see some sellers on this C halfback. We said won't be surprised. That's how, I mean, mechanical traders are just kind of so easy just assume what they're going to do because they're very visual creatures. Where are they going to sell from? Well, probably half back of the last period. Um, you would think that the lower dollar, the higher value of Bitcoin. I would think so. Yeah. Yeah. I mean that's typically how things trade, right? Things that are pegged against the dollar. If the dollar is going up, they're going down. So I wouldn't be surprised. It just hasn't happened. I mean, kind of happening in Bitcoin right now, right? Bitcoin's going up and um, this thing's going down. Well, so I still think that things are a bit inflated, Kevin. Like, so, I think prices are still elevated. Not that they can't come back to these levels. I just think that they may have reached levels that they shouldn't have yet, which is actually kind of nice in the long term if you think about it, um, because then we'll have levels to play on the way back up, right? Uh, so that's kind of nice, especially because I think it will be a
Right.
bit slower of a
Makes
grind, but
yeah, 'cause now half back is 30K,
from
the all-time high.
all time high. Oh, okay, yeah.
So we know we're gonna at least go to that, be that level.
Yeah,
I'm
probably.
guessing.
I wouldn't doubt that, eventually we see 30K again for sure. So single prints close here. Still 11 minutes left. Nice move off that two. Where's the 20% level? Yes. And remember, if you're trading the futures contract, we're on the September contract now. If you're trading futures, the U percentage here. Fuck, it doesn't stay. Oh god damn it! I nailed 20% right there, and then boom. So we know that the level here is probably 67 is the basically the last chance that buyers need to hold. Below that 67, you'll probably rotate back down. Look how much the breadth has changed. Remember, it was like 150, now it's only 50. So it started to get a lot of selling down at the lows. Or a lot of ticks down at the lows. And remember, when you're thinking about big money, right? And I'm not saying that you should do this, because it's the reason that big money does it is because of the size of their accounts. But big money is not buying as the market's going on an uptick, right? They're buying down ticks. Down tick, buy, down tick, buy, down tick, buy. Right? They're buying those down ticks. Um, that's I mean that, but we don't necessarily have that luxury, because they can buy some down ticks and the thing could keep going down and they can keep buying, right? They've got a bigger account, so a lot of these hedge funds and institutional money. DXY could reverse from here. Yeah, it's right at that other high. Euro futures are getting. Pound futures are getting clapped. One futures are getting clapped. A lot of currencies just getting crushed. I wonder how New Zealand dollar. gapped. The buying on this way up just looks super thin to me. I don't really trust it. Let's see if they can get that cessation of one time framing, which means that the market could get rotational. If this D high is able to take that C high, it does look like that is their target. Right, you're getting a lot of buying on this 37.80. They're just not able to crack it yet. So let's see if they keep pushing it up there and try to attack that C high. 37.85, the half back. There's some sellers sitting up there. It's 6 minutes until the European close. Are they going to get those stops? Not yet. There they go. There's the stops. All right, so they got the stops. Impulse zone's 82. We need to hold above 82 in order to get that 85 here. There's 85. They trade it. Nasdaq's ripping up. Remember, impulse is 82. Below 82, this thing can go back down. Comes right to 82, bounces a little bit. Let's see, this is where they've kind of got to hold it back, this 82 level. You're seeing selling off the half back here. It's just a matter of how strong they're going to be and how quick they are going to be to cover, right? So if they sold on the 85, they're in the money now. If they don't start to get some teammates coming down to sell a little bit more, then they're going to be more inclined to cover, which would cause the market to go back up, right? And people that are short from earlier, this is going to be more inclined for them to cover their shorts if, you know, well, I mean, there it is. The seller showed up that we were waiting for, so never mind. All right, I'm covering most of that add-on right here, 77, 78. The ad was 72 or 82, I mean, and then covering the most on 77, 78. Could still keep going, right? There's some support 74 to 72 again. Or 72 was our initial breakout area. So below 72. Now you're starting to see longs cover. A little volatility coming into the market here. 2 minutes until the next period opens up. Remember, D period took the high and the low of C period, showing a little bit more emotion coming into the market here. A lot of buying on that 79.75 right there. would you say that this current downtrend is a clean one? Looks to me like they're making sure that there's no single prints as we go down. I mean, we've seen, so if we go back the past couple of days, right? This huge gap. There was no single prints this day. This day even, I mean, if you really look at it, it kind of looked like a B profile, looked like a lot of shorts were just kind of covering all day, and then eventually the seller came back in, right? So it looked like a low volume day. I didn't trade Friday. I wasn't oh no, Friday I did trade. Thursday I didn't trade the downside because I wasn't at my computer. But Friday, Friday we had that big downside, and then just kind of everyone started to cover their shorts. Market rallied a little bit. Seller came back in and smacked the market back down, just as people started to get hopeful, right? Then we have excess, big gap, and then this downside. So if we look up here at this profile, I mean, there's still some pretty big single prints up here. What is interesting that I have noticed is this. Go back to, okay. What I have noticed that's interesting about this is if we go here, uh, okay. So if you remember our gap before, let me bust this time frame a little bit more. Go like 3 years, be good. Okay. So we remember this previous gap right here from about 40.37 to about 40. I mean, what's the high on this bar? The high on this bar is this one. The high is 40.14.5. So look where this gap starts. 40.14.75. So we literally had a gap on the way up around the same spot, and then a gap on the way down at the same, well, not the same spot, but right below it. Right? I mean, to me that's basically just showing that that's a spot that uh that's going to be a key spot. So going back up, that's going to act as a bit of resistance should the market turn back up towards that area. What's interesting is D took the C high on the ES, but not on the NASDAQ. Would you class the low as a weak with it being off the 3750? Is the 3750 another, is it a key, is it like another reference? I would say, I mean, it's hard when it comes to those psychological numbers. Yeah, I figured it was just the round number. It's hard when it comes to those because you never know. Like, um, it was kind of like if you remember a couple weeks ago, we were like right next to 4100 and just barely missed it. Um, this time we came right down to it and bought it almost because the 50 is. I don't think it traded to the 50 exactly, did it? Traded to 50-50. Yeah, so it wasn't able to make it down to the 50 exactly, but it was kind of a interesting auction down there. A little bit of absorption, but I wouldn't necessarily classify it as a weak low. It's just another low that like, so let's say when we come down here, when I'm thinking about my short, I'm thinking about covering here, right? If the market gets back down here and we don't see more selling, right? I'm thinking about covering here because that bid that we were talking about earlier, that we were looking to see if the market traded out of the 50, look for the reaction. Well, the reaction was all the way up here, 30 points above. So I would assume that the buyer here is a fairly decent buyer. You know what I mean? That's kind of how I look at it. Because if not, then the reaction should have been, moot, like should have just been shit, but it was big. 897, what's up, man? Renko, what's up, bro? Cashing in or what? That E low mechanical. And remember, this is how stuff gets started. Okay, so we have a low excess, right? We saw the bid held, we rallied 30 points, came back down. We now put a mechanical low. So now we're thinking, if I'm thinking about my short, which I am thinking about my short, right? Data point 1 against me, data point 2 against me. Yes, we know this is a weak low, mechanical low, but these lows, these mechanical lows, they don't matter if price is not near them. You know what I mean? Does that make sense? Like they matter, and there's good odds that it comes back and corrects that at some point. But because price is not near it, right? We're 10 points above it, it becomes less important, right? It's just one data point that you carry forward. That's it. So we carry it forward, carry forward our excess, right? I'm just not going to draw a million lines on my chart. I write them down, um, and then base it off of that, right? But this is, one of those things. It's like, well, there's the second data point. They couldn't, sellers. So if there was enough supply, should have traded through this number, but we didn't. So now I have one data point against me. I got flat tire now, and I kept driving obviously because I'm just dumb apparently. And now I have two flat tires. Now I'm thinking, shit. Good thing I got that new fucking Pathfinder that's got OnStar and press the button. Someone's gonna come pick me up because I stayed in this fucking trade too long, right? I'm not saying the downside is over, but I'm saying I definitely could have just played this better. Luckily, I added on that first rally, but I'm not adding on this rally. I'll tell you that. I'm kind of nervous about this rally. Who are the market makers in the futures? The CME, the exchange. All of the futures trades go through an exchange. The CME, Chicago Mercantile Exchange. Exactly, Tommy. Exactly. That's a good way to put it. Tommy said we would have fell straight through it if it was weak money with the market sentiment being so negative. Exactly. And that's why we think about stuff like that, right? Is we have the market just, down 2 big days in a row, third big day in a row, and we came right down to a mechanical level and just did not bust it, right? Not to say that we won't bust it, but whoever the buyer that was buying down there has decent size, right? To scare the market up 30 more points from there is a pretty decent sized player, right? Making these sellers fucking air up their Converse here or strap on their Hirachis, right? They've got some work to be done. And basically what's happening here, right? So my deduction is this buyer was able to hold, right? Buyer was able to step up. Okay. Opportune moment for sellers to sell half back, which they did. We got a little bit of retracement, right? E came all the way down to 68. So these people, these sellers that sold off half back, they're probably happy with what they got, right? So they covered. So they're out of it. So this halfback is probably good to go to get taken here, unless they try to sell it again, right? They got a decent reaction. So they might try to sell it again, but it doesn't look like they're gonna. So next we'll look for the middle of these single prints, this B halfback, and that's gonna be fuck, rid of this. What is this? This is like 90 basically, 79, 90. Yeah, 90, there's 154 lot order on there. Like they're still selling the halfback, but it looks like it looks kind of like they're covering their shorts here, their last bit of shorts. And you've got laggard traders coming in. That's another thing I wanted to bring up too. Um, the you got to think about the people that do the people that like fuck, I can't remember the four ways that Jim yeah, this definitely could be fueled by Europe close, Peter. Yeah, I think it is, to be honest. But it definitely could be. But the thing is, it could cause a big. I mean, it's caused a big move, but um, because Europe was so short, right? It could cause a really big move. And if these European hands are weak, which they closed, I mean, Europe closed 9 minutes ago, so we know how weak these overnight traders are. It's a long ways up, 38.78. Some people cash. Damn, that's what I should have done. Should have bought long calls. But, um, but I can't remember what the names Jim calls. But so basically, he has like people that are first. Those are like innovators. I can't remember what he calls them. Innovators. Uh, Second place, opportunistic people. Third place, call them static. And then the fourth place, laggards is, I know that's lag. Okay, and so this is how I want you guys to think about this, because we really just saw this down here on this halfback, right? So E period came up, they sold it down a couple of ticks, and you started to see some selling come in, but that never came through this weak volume area. So not enough supply to get it back, even back past the halfback of the period, where the volume was at in the past 30 minutes. Market traded back up. So what we saw here in D period were opportunistics, those first and second category people, or innovators, right? 3, some static reference sellers. And then the fourth, laggards, which is where we want to stay away from, was during E period, we came up and did the same thing, and they got short, and then had to pay a little bit of heat here and got ran out. And so you want to think about that when you're trading. Think about who your competitors are and what stage is the market in this specific period or in this day. And then we always zoom out to the monthly, weekly, daily. And so you think about things like that, and that's kind of what I was thinking about right there. Those people that were getting short that second time at the 85 were just late shorts getting trapped, and were able to pop back up there. Single prints didn't close here. So now what we're thinking is, if there is supply in the market, if there is enough supply, and we're going to keep holding on to this short, which my stop is literally right when we close those singles, so it's pretty close. I cut most of the position already though, but still frustrating. If there is enough supply, this mechanical low shouldn't hold. But I'm not just getting short right here, hoping that mechanical low holds, right? I've been short for a little while. And so I have breathing room, things like that, like good risk management, right? But if this keeps not holding and we get 17 minutes of of no downside, then that's just going to tell me, well, this is yeah, well, there it is. Never mind. Don't need to guess at all. Next level is 3,800. Let me see on the SPY. Oops. Not really a level on the SPY until 385 or 3,850. I mean, they're targeting that open here, where all the volume's at. Back to the VPOC. And so this is where we want to start thinking about the market sentiment, okay? So if you're a larger trader and you swallowed up this trade from here and you're close to 50 points up in relatively short amount of time, right? About an hour, what are you thinking about doing with some of your position, right? Even if let's say you're trading $1 million account, right? And you filled a decent amount down here and the market starts to get up here into this high volume back into the Globex low, right? You have to assume that that bigger trader, that's what they're looking to do. They're looking to sell any rally. So anytime the market pops up, unless the market's able to pop above that 80, which is where the offer's at, right above the open, then you want to be selling on those rallies to cover some of your long position, right? Because you don't want to be sitting here and make the stupid mistake that I made of letting the market get all the way down here and coming, almost all the way back up to your entry, right? And that's what this bigger money is most likely doing up here. Locking in profits for sure. For sure. So that E period in the Nasdaq finally took the D and C period highs. That D didn't take the C high, but E took both highs. Now it's coming back down into its range. So look for mechanical buyers on this E half back. This could be our third flat tire here. if there's no push through. Since it's all electronic, no open flood, it's got to be tougher. What do you mean, Martin? Like because of the market makers? Like, um, well, it's still fairly uh influenced by a lot of other things, so you can still monitor a lot of other things. So look at that. They hold that half back pretty strong right there. That E half back. But we're still pretty close to it, so I haven't really, I haven't really locked it in yet, if that makes sense. Right? Got one, two, three, but more of a three question. Bid stepping up 85.50. See if they can get filled. People front running. 85 people buying the halfback here again. So they bought the E halfback and now they're buying the halfback of the profile. So these shorter term traders are flipping bias right here. Let's see if the bigger seller, longer term time frame seller is going to punish them here. So there's 4. Now you got no tires on your car. You got 1 excess, 2 E low, 3 E halfback, 4 halfback. Crude's back to positive. Barely though. VIX is up at 33. So they give up half back there. So there's those shorter term time frame traders getting punished a little bit. See if mechanical buyers are going to move down by that E low or E half back, I mean. They are still so far, but not doing a very good job. Look how far apart our half pipe is becoming here too. Long way. Right? Pretty ugly half pipe too. Shorter term time frame traders are getting punished here. See if we can continue to get sellers to move down. Bitcoin's trying to hold its low as well here. It's a mechanical high or high. Weak high, I mean. Europe 600 index closed at lowest level since March 2021. That's pretty much going to be the ES today as well, because we're at like 2021 levels, March 2021 levels. Offer moves down to 79. See if they hold it. Here we go. So we can just assume, all right, or I'll assume for us that we found the buyer, we found out where he took profit, and we found the seller right here, 76 to 80, or I mean 86 to 90, 76 to 80, 70 right here. Okay. 70 or 86 to 90. That's probably where the seller's lurking at. So if that seller is going to come down and keep selling, we market may get rotational until it makes another decision. We do want to keep remembering this level here. If we do get some supply, that will be the first target. Second target will be probably the previous low. But we're starting to see our half pipe kind of hold right here. So this is where we need to see the selling get through. So if we can get through this level and start to see the tempo pick up, start to come down, get us hold below that 72. Remember, 72 was a kind of a key level earlier. Get below that 72, target this mechanical low, and then target the low of the day. But this area in here is kind of just, I mean, chop for the most part. 80 to 72 is most likely going to be pretty back and forth. Oh. We can see how thin the profile is here in the beginning, basically with no one wanting to make the decision, right? I think what's happening here is, seller's holding it down a little bit, but we're basically just looking for that seller to initiate at these lower prices and push the market back down, or for these shorts to give up and start to cover and take us back into that overnight range, and that would take us back above the open, and then we'll start to see some more likely scared longer term shorts, or not scared, but seeing that price is back at a fair price and wanting to close, which would mean more short covering. Dan, what's up, man? I'm good. How are you? I'm doing really good. How are you, Dan?
Hey, did you see Celsius halted all trading?
I did not.
Yeah.
What did they hold it for?
Well, because they got a big holding of staked ETH, and it's losing its peg, and yeah, the coin's down like 70% or something, and they halt all trades and withdrawals. It's pretty bad. And he was just on Invest Answers last week talking about how they're never going to have a liquidity problem, and they're all good. That was like 3 days ago. I don't think they're going to recover.
Yeah, probably not. Dan says making a living but can hardly fatten up this futures account from 5K with price action. Kinda just been hard struck withdrawing my daily profit goal and then not getting anywhere. Oh, ETH led the sell off and then Celsius started dumping. It's been a good morning to be honest. Yeah, today has been a pretty easy day to trade. Very like responsive and not really too punishing, at least. Like, even the way down you had, I mean, clear signs when we were in C period, right? Those single prints, and then D period single prints closed then the rally, right? So there was kind of keys setting up for a lot of these things. So it wasn't as difficult of a trading day as some of the days last week, that's for sure. But if you're having trouble building up that account, is it just because you're afraid that if you keep the money in there that you don't want to lose it, or uh, what do you think is the reason that you're not able to fatten up the account, as you say? Looking to short the next pop? Yeah, just be careful. Just be careful if they get above the open, because the market's starting to sequence. F low is on the E half back, E low is on the D half back. Um, Interesting that F high is at the D high. I don't know. D or it's at the half back. Always pay yourself. Yeah, definitely. Definitely need to be able to pay yourself. Yeah, I mean that's a good way to manage some risk too, is if you keep the money out of the account or if you withdraw the money every day from the account, you can't lose it. You only have the money in there that you can afford to lose. GM's coming out with a all uh like a battery powered blazer. I wonder what it's gonna look like. May not hop in till the Asia session. You had 60 ETH short from 1800. Damn, got clapped today too. Wasn't ETH down? ETH was down at like almost 1,000. I think I saw. Your long trigger is a reclaim of the 25K. I think it might. I think we might. Bitcoin might go down to 20K, and that's where I'm looking at buying it. It's 20K. Yeah, that's true. So for Bitcoin this week, because of all the news coming out of the US, you might not see much reaction out of it at all, except for during the US hours, because it's going to be playing off of that news. There is some other news coming out of the ECB, right, about their rates as well, so that should affect it. And then, there's also some other geopolitical issues going on right now with China and them kind of basically saying Taiwan is China, and if anyone says otherwise, then they gotta deal with me. What trading platform am I on? I am on Sierra Chart. So this is Sierra Charts here on the left, and this is Trading View here on the right. Biden has basically said we'll fight for Taiwan. Yeah, that's yeah. I mean, we'll see what happens there. Yeah, no problem. He's really intimidating to China. Well, I mean, the reason I'm unsure of that is because like that's just pouring gas on a fire that's already going. You know what I mean? There's just I understand like there's we don't want people to be under a dictator's control, but um also like what do we got to do? And it's I mean it's kind of like if you guys remember World War I, right? The US wasn't really involved in World War I at first. Um and then was just, or World War II, I mean, and then, kind of got kind of got drawn in a different way, and then boom, so well, I mean, we have no idea what will happen. I just don't think that pouring gas on a fire normally is the best idea, but sometimes it's necessary. So on my Top Step practice account, I shorted the NAS for a 300-point move. That was funded 50K account. That would have been a print. I feel like with the indexes, you have to be patient. You can make some easy swing trades. US isn't going to get in the middle of that. Yeah, I don't think so. Not I don't think they'd get in the middle of it um on the front page. You know what I mean? Scalps are tough. Fibonacci's and EMAs and SMAs, daily ADN, weekly levels. None of my crypto trading strategies really apply to short-term moves on the Nasdaq. Hey, you should check out the profile, bro. The profile on the Nasdaq is actually not bad. But yeah, I mean, it's a lot more whippy, and the Nasdaq tends to be a bit more trendy too because it's only based off of 100 stocks. So If all those stocks are going up or if all those stocks are going down, it tends to be a fairly trendy market. You just have to be patient and wait for those highs and lows. Oh, range profile and delta. Oh, okay. Holding a position overnight. Yeah, there's a big sell-off overnight. So back to this 90 level. This is kind of a flip level for the buyers. They kind of run right through it right there. Yeah, Dan, yeah, it does. We get about 2 ticks above that previous high right there. Then we re-enter the E range. Hard to tell, Tom. To be honest with you, it's hard to tell. We have that poor low down there on Bitcoin, so it kind of looks like, um, it kind of looks like maybe a combination of both, right? But I mean, you got to think about it's beat down pretty bad, so there probably is some buyers there. When I think about it, um, I think more of it in terms of the human psychology and think like even if it's not the bottom, right? Even if we do go break, because it's bounced, I mean it's up, $1,000. You're gonna get more buyers starting to pile in naturally. Open interest and longs are just dropping as we rise here. Yeah, but so just remember that even if it is short covering, and this is kind of why you don't want to wrap yourself in a box because you don't know for sure if it is short covering. It's just a guesstimate, right? I don't know for sure if it's short covering. It's just a guesstimate. I think at this point it's a combination of short covering and some, opportune buyers. Some people thinking, okay, well, we're above the value. Opportunity here is to get up above that open. They're starting to take a chance. As that happens, you get sellers closing old positions by buying the market. So that open interest is going to be coming down. It's just going to matter of the rate at which these shorts start to get scared. And now you're seeing that capitulation here from some of these shorts as we got back into value, really starting to decide, shit, do I want to hold this Bitcoin short? Do I want to hold this Bitcoin short? Right? You filled that 2400. Nice. 24,100. Short. Nice. And see, it's just a matter, like right here, it looks like longs are taking profit. Um, it's just going to matter if this is that opportune moment. Our buyer is going to step back up. If we're back down to the 90, this is where they kind of had the step up before. They had the chance. I wouldn't really say they got the stops of E period, uh, but this is their opportune moment here to step up and initiate these higher prices. If they're unable to do it, well, decent odds they go back and push for that E low. You think this move will take some time to recover? Well, I mean, it just depends because, especially in the crypto world, there's so many believers. You know what I mean? It's kind of like a cult almost. So I wouldn't be surprised if you just started seeing a ton of buying. There goes the market. The ES takes those stops. Let's see if it can hold the impulse. Like we said, the impulse is 90. Their target's going to be the open. Not able to get up there on the first try. Watch the retest of 90. This is where they'll need to hold. Just came up to the cash view up at or the 24-hour view up 37.97 half. Excuse me, 2 ticks below the open right there. You got a relatively tight stop. Range POC for volume. Mine is on, I mean, it's like right 23,650. Yeah, it's not a bad trade at all. I agree. Dang, I'm tired today. Back to the 90. Let's see if buyers want to step up right here. Oh, you're looking at Binance futures. It's close. I mean, it's fairly close. You know, it's not too far away. Let's see, coming back up to that VWAP, that 3,800, very easy to spot level above, right above the open. So there's naturally some sellers sitting right on it. And it's going to take some effort here, right, from buyers to pop above the open. But once we pop above the open, it starts to get a bit dangerous for the downside because you've got people naturally wanting to get short. And if you start to see these weak-handed traders from Globex start to cover, this thing could really start to go. So, Visual Trader is up $3,654 trading the Dow. Good job. Really nice. Watch the 90. Break of the 90 could bring us back down. Probably like 85, 83. So there's the 90. Look for sellers to come down. Look for this 85 level. So not able to get down to half back right there. They're trying their best though. One time framing up from the low with still 12 minutes left in F period. The breadth, let me pull over the breadth here. Take a peek at it. You can see 39. Remember, we were at 150 at one point today. Back at 39 now, 7-1 on the NASDAQ. Target is, they're still looking to try to hold below the 90 to get to that half back, but they're just kind of struggling. Look, if they want that 85 so bad, people are just front running the halfback right here. The structure is kind of weak right here in between like this 89 quarter to 88.50. Still, see. So back to the 90, they were not able to get back down to half back, right? So if there was some supply, we would have taken it down there, but people are front running half back right there. And when I say we, I mean, the market, not me. Yep. That's it. Back and forth, back and forth. Dollar's starting to come down here a little bit. Damn. Almost got you. Might get a second chance here. Let's see. Ooh, bids just kind of pulled for a second, let the price come down, and then scooped it right back up. Scammers. No, it always feels right. Triple Q's getting some gas right here. The Nasdaq, I mean, same thing. Remember, they're targeting that open back to the VWAP. Some more selling. Right back down to that 90 and right back up to the 94. Uh-oh. What are we starting to see here? The emotions coming back. This is where it becomes important to have your levels written down in front of you so you know where to watch. Big seller on the, what was that, 93 half? Look at this. 591 lots, 93 half. Traded on the bid. Battling back and forth around that 90. Yeah, so basically what Bitcoin's looking for is looking for acceptance back inside of value, right? So it's breaking back up inside of its value area and it's looking to find acceptance inside value, and that's when it will go test that weekly VWAP. Um, a lot of these other things are already testing their VWAPs. 93.50, that big sell order, we're right at it. Right below it now. If we get too far above this 93.50, you're going to start to see just him cover that short. That was a big short, 500 lots. But if Bitcoin gets accepted back in its range, that's when it will look to test and get above. And then you'll have to see if the seller comes in to sell that VWAP again. If not, it's above, you might see shorter term buyers flip and the market probably get pretty rotational in here. You think we were going to pop, Tom? Yeah, there's definitely good odds for sure. Just cannot get that open. Close for $100 profit. Nice. Can't beat that. You said the futures looks like it wants to pop? I don't know. That's the second time. It's like the third time it's been up here and hasn't popped that open. That's starting to me to seem like buyers just don't have the gas. Um, but we know that if they get too far above this 93 half, they'll start to see this guy probably start to cover. Delta's up when longs are down and open interest rising as price rises. No real divergence or anything. Open interest rising and price rising at the same time typically means like new buyers are coming in the market though. That's what's happening on Bitcoin, you said? Likes to pop a 0.5% pretty fast, yeah. That is true. Well, and a lot of times in these kind of choppy zones, right? So we're seeing the market just kind of chop back and forth. Same thing on Bitcoin, but kind of same idea here. What we're seeing is, you're getting these laggard longs getting trapped up here. So the seller's getting this opportunity to come down and, give, you know, give some of that back, right? They're getting an opportunity to sell, right? Maybe let's say they got short on the half back, they got ran out. Where's their second opportunity? Well, these late shorts that are trying to buy above the open that are failing, there's an opportunity to short back where? Back down to the 85 is the target. They failed to get down there the first time. But the response, right? So we came down to the 85 and then popped back, tried to get it again, couldn't get it. So we're kind of in this, really tight range right here between the 90, well, not really tight, I guess, 98 and 85 of where they're just going to try to get as much supply as they want and then move the market whichever way that they want it to go, right? I wish I could tell you which way that it's going to go for sure, but there's just know, there's just no way for me to do that. I do have my eye on the 93 half, right? Because we know there was that big sell order there. Um, and that's really where I'm watching to see if market can stay below that. If not, I'm just going to assume that this big sell order is going to start to cover his short, um, and then go for the open. If we do stay below this 93 half, the target is definitely going to be that 85, and break below that 85. Goes G periods opening up back down below the 90 level. Decent volume for Bitcoin. Because for Bitcoin, you're just looking for acceptance back inside that value area. If Bitcoin gets accepted inside that value area, then there's decent odds that it can, go back up to that VWAP. But if it's not able to get accepted, then we'll probably see a push back down. The thing is, when we've got this one time framing off the low, we won't really know that it's not going to get accepted until then. So this thing could really just bounce around, and then finally pop up. That's kind of what they're trying to do, right? They're kind of trying to chop, 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 chop as much as they can until they get the position that they need to take the market where they want to go. Our ideas here are just to try to identify what they're trying to do and get on board for a small taste, a little piece. Sometimes you catch a nice big one, but you got to be expecting the small one at first, and then if the big one goes, then great. And that's how you get built into runners and things like that. Build 24,200. Nice. All right, guys. Well, I am going to call it a bit early today. We are going to celebrate Father's Day at my house today, because we're starting our move Wednesday. So, we're not really going to have time to do anything for it. So, we're going to do it today. Going into the rest of today, like I said, it's kind of just seeing what the market does, right? So let's use this Globex low so far, 3,800, to see if the market can hold above. If the market can hold above that open, there might be some opportunity to get some of these weaker hands covered and some upside. If we keep getting this weakness and get back below this Globex low or back below the open, there's going to be opportune moments, right? We do have that mechanical E low, but we are starting to see a little bit of sequencing here, right? Remember, they tried to get it back down to that 85, couldn't. That G period got front ran, and there it goes again. I mean, there's a little Paparuski there. Now let's see if it can hold the open. But yeah, I'm gonna go get a workout, and then we're gonna go out to eat and stuff. But I appreciate all of you guys hanging out, everyone's conversation. Hopefully, you guys learned something. If not, hopefully at least you had a little bit of fun. If there's anything you want to see in the upcoming videos or anything you'd like to hear more about, just comment below this video so I can go through and get all that stuff for you on the next stream. Other than that, we will see you guys tomorrow. Make sure you're managing risk and sticking to your trade plan. Have a good day.